Thanks for joining us today for this little conversation that we like to call Inside the Investments. Today, we're going to be delving a little bit deeper into the digital or cryptocurrency space. And we're excited to get to have Zach Pandl here with us from Grayscale. Zach is way smarter than we are in this, as is his colleague Connor, who you may see here on the screen. So again, we're excited to get to learn from some pros and share some insights with you. Zach's got a background in economics in both his undergrad degree and his master degree. But we'd love for you to hear directly from Zach. Zach, tell us a little bit more about your background and your journey to arrive here in the realm of crypto.
Yeah, absolutely. Adam, great to be on with you and with everybody else. I'm Zach Pandl. I have the pleasure of being head of research at Grayscale Investments, and Grayscale is the largest crypto dedicated asset manager in the world. So we're doing all things related to the crypto or digital assets industry. And we function just like a traditional asset manager. I oversee the research function, which is trying to understand all of the different aspects of the market, all of the different investable tokens and how they relate to the fundamentals, as well as things happening in the broader financial markets. I've been a professional markets analyst for more than 20 years. Prior to this life was doing kind of macroeconomic type analysis on Wall Street, covering the bond market, currency markets, commodity markets, asset markets that are affected by the economy as a whole. And Bitcoin, the largest asset in crypto, is another example of that. It's a macro asset. It's driven by the same types of things that are driving demand for gold or aversion from the dollar. And so that's what really drew me into this area. But once you begin to understand Bitcoin, you realize that there's just infinite depth to this subject matter of blockchain technology and digital assets. And I was convinced that I needed to, stop what I was doing and spend the rest of my career just on this topic. So really, I'm delighted to do these things every day, work on this topic, and happy to share whatever we can with your clients today.
Well, we appreciate it. And what a cool way to come into the industry and have a background in understanding the way that other asset, more maybe we can call them more traditional asset
Yeah.
classes, such as stocks, bonds, commodities, like you mentioned. That gives us always a good way to benchmark a conversation for somebody who may be new and taking a step into what can sometimes seem like a scary new realm, even though it's been around for over a decade now. So, um, you said some terms already that I thought were really interesting, like investable tokens, macro assets. Can you maybe give our audience a high level overview of just the universe itself of crypto investing?
Absolutely. Let's start at the very zoomed out level. So when we say the crypto asset class, the digital assets ecosystem, these terms mean the same thing. What are we talking about? Well, first, from an asset market standpoint, we're talking about a roughly $3 trillion asset class today. To put that into context, the high yield bond market is about a $1.5 trillion asset class. You're about two times the size of the high yield bond market. And the global hedge fund industry is about a $5 trillion industry. So $3 trillion. So it's certainly a meaningful asset class, and we think of it as a mid-size alternatives asset class. So it's smaller than private equity and hedge funds, but bigger than some of the other categories. So sort of mid-size alts or alternatives asset class is how many investors will approach it. And this asset class is all based on the same underlying technology, which is this concept of the public blockchain. This is really the technological breakthrough that gives ultimately value to all of these assets. And Bitcoin is the most well-known, widely used version of that public blockchain, the first public blockchain, and by far the largest by market cap. So Bitcoin is more than half of that total market cap. So the whole industry is 3 trillion. More than half of that is just Bitcoin. And Bitcoin has a particular use case. Bitcoin's use case is as a type of sound money. We know, everybody understands that there are kind of weaknesses in some ways with traditional fiat money, whether it's inflation or other limitations when you're making cross-border payments and other things like that. Bitcoin is a type of sound money, and it's its own unique thing. not like anything else in the financial system. But the best metaphor for Bitcoin is digital gold. So you have this asset class, $3 trillion, all based on the same technology, and half of it is digital gold or Bitcoin. Now, the biggest misconception is that the other half of the asset class are things that are just like Bitcoin, things that are wannabe Bitcoins. But that is not correct. This asset class has a huge diverse range of use cases beyond just this sound money use case. That's one use case of this technology, but there's many other use cases. And many people are not deeply familiar with those things today, but they're very likely hearing the terminology increasingly. So things like stable coins, smart contracts, decentralized finance, NFTs, prediction markets. All of these things are the other types of use case of public blockchain technologies. And so increasingly, as this area grows, Bitcoin is really the first big application of this technology. The rest of it, I think of it as the second stage of the rocket, the stuff that is just reaching a product market fit today and will drive a continued growth of the asset class. So we should dig into all of those different aspects, but that's a very high level sketch. $3 trillion, a mid-sized alternatives asset class based on blockchain technology, dominated by Bitcoin today, but with tons of other use cases and things like stable coins and many other areas.
Zach, I think you've already expanded my mind in terms of this. And I'm a note taker. I'm an active listener that helps me digest this. So
Me
hopefully
too.
for our audience too. You mentioned distinguishing that idea of Bitcoin as half of the industry itself, but also these other asset classes, which I think is important because when we don't know anything about cryptocurrency, we tend to lump it all in one bucket. And you already mentioned for our listeners, sound money like Bitcoin, stable coins, smart contracts, NFTs, or non-fungible tokens. Is that correct?
Correct.
I still don't know what that means, but that would have to be another conversation. And then did you say prediction markets? Was that the last one?
Yeah, that's another great example. Maybe just to highlight that, people may be not even aware, but when you are watching an election, or the presidential election last year, or things like there was a lot of attention around the New York Democratic primary for mayor recently. Sometimes you'll see in the news media probabilities. Well, Trump and Harris have different probabilities of winning, or Mondami has a probability of winning the primary. Those things are coming from prediction markets, and the largest prediction market is called Polymarket. And that's a blockchain-based application. So, users don't even need to know sometimes that the blockchain technology is operating in the background, but it is, and that's another application of these tools. So there's a huge range of applications from things that are as simple as payments, cross-border payments and things increasingly run on stable coins. Prediction markets can be thought of as part of the modern news media landscape. Bitcoin, of course, is its own special thing, and it's a macro asset, it's digital money, and people are thinking about budget deficits and the behavior of the Fed, and those drive people to Bitcoin. So it's a really diverse space, a lot to keep a handle. But what people should be aware of is it's growing fast, and it's all based on the same technology. You're investing in growth and adoption of public blockchain technology in different industries.
Yeah, and I think maybe even as diverse as the asset classes themselves is the way that an investor may get into the space. Can
Absolutely.
you talk a little bit about and distinguish some of the different structures through which investors may be able to gain access to crypto or digital currency?
Absolutely. So maybe give three different options just to kind of keep it clear, and happy to go deeper in this. You may have heard of people early on kind of getting Bitcoin and holding it themselves. This is what we call self-custody, where you need to protect your own password or device. And if you lose it, there's many stories about this. If you lose it, it's gone. So really, that's called self-custody. And that's holding crypto as a bearer instrument, the way that you hold cash, or in the olden days when you held a bond and you had to pull the coupons off of the bottom to go get your interest payment. Those are bearer instruments, and it is possible to hold crypto in that way as a digital bearer instrument where you are responsible for holding all the important cryptographic information and securing it. And that's an important part of how crypto works. And it's what it allows us to have digital goods, digital commodities. Ultimately, is because of this structure. Things like NFTs could not exist if we didn't have that structure. So for people that have a degree of sophistication and personal security around these things, that can be an option. However, it requires a fair amount of security. So many people, and again, it will be very common, especially for Americans, to have tried investing in some crypto on Coinbase or another large platform. Coinbase is the largest platform in the United States. There are many others, but that's the largest here in the United States. So putting some money on Coinbase. The advantages of that is that you have someone to trust to look after your security. You don't have to look after your own kind of cryptographic information yourself. So it's a lower sophistication option. The downside is that there can be associated with a fair amount of fees. These platforms charge high sort of onboarding fees, or what in the mutual fund world used to be called front-end loads. We don't have those anymore, but those things still do exist in crypto. And so investors should be very aware of the costs associated with using these platforms. And Coinbase is a very reputable platform, but not all of them are equally secure. And so there is some due diligence that everyone has to make when they're using a centralized exchange or an intermediary of some kind. Those are the sort of some of the legacy ways that people have gotten access to crypto. What has happened in the last year and a half, it's been brewing for a little while, and Grayscale has been involved in this business for a long time. But really, what I'd like to highlight is the exchange-traded funds, the ETFs, or the regulators like us to call them ETPs, exchange-traded products. These are now available for the two largest crypto assets, Bitcoin and Ethereum, and increasingly will be available for many, many other crypto assets. And I think that these products strike the right balance between security and cost. Grayscale offers the lowest cost ETFs and these ETPs and these structures in the U.S. And so very competitive from a cost standpoint. And all the security issues are outsourced to professionals. These assets live in your brokerage account, so tracking them, dealing with the taxes, dealing with beneficiaries, estate planning, rights of survival, all the kind of things that you need to do for managing your assets professionally are solved in this structure. And that's why they have been so wildly popular. So these are three different ways to kind of access crypto. Self-custody, do your own homework. That's really most sophisticated option. There's a middle option, put money on exchange, maybe is okay for small dollar values or people just getting started, experimenting, learning. That can be fine. For professionally managed money, larger investments where you're dealing with all the issues related to, say, tax and estate planning, the ETFs are really a great option. And that's why they have broadened the range of investors who are accessing crypto markets. Now there's a product that helps them, that fits very well into their existing structure. And that really speaks to the success of the ETFs so far.
Zach, that's great. And I think you draw some really quick parallels to some of those realms in which you previously worked, right? If we wanted to go buy gold, we speak with clients about this all the time. There's some beauty to buying gold and having the physical gold, right?
Absolutely.
It's tangible. We can feel it, we can touch it, but there's some security issues that come with that. There's commission issues on the buy and the sell side that come with that. You can own it in an ETF as well. So similarities there, even direct real estate, right? We can own property directly as a rental. We can own it as part of a real estate investment trust that's not traded on an exchange, or we can go buy the Vanguard real estate ETF, right? So I think that's great, and hopefully helps to start to shed some light on the fact that there's a lot of ways to do it, depending upon the degree to which you want to be maybe directly managing it. So thank you
Exactly.
for that. You mentioned one of the use cases for predictive markets and the New York race on the political side of stuff. Let's talk about politics and legislation in general. What legislation, government policy changes, or regulations should investors be aware of as they're considering getting into or maintaining their exposure to the crypto space?
Yeah, a great question. But crypto is a grassroots, bottom up, retail enthusiast global phenomenon. It's something that emerged on its own. It did not come from a major institutions, regulators or banks. It was it's something that grew up organically on its own. And like other examples like that, eventually it's going to get to a size where a proper regulatory framework needs to be in place for these assets because it starts to have implications for consumer protection and financial stability and illicit activity and all the things that are important aspects of the regulatory regime. Now, it's incorrect to say that there's been no regulation or law enforcement in crypto or anything like that before this point. That's been a huge part of the industry, and we can go into that if helpful. But what is happening now is that President Trump came in with a kind of clear message that we were going to bring full regulatory clarity to these products in the United States. And those efforts are not just coming from the president, but they have bipartisan support in Congress. So we are seeing the U.S. Congress put together different types of legislation and agencies do all kinds of rulemaking, really to give us this really complete regulatory framework for digital assets, for stable coins in the United States. These are going to allow, again, I think these products, the oversight is significant, and these products are already safe in many, many ways. So I don't think the regulation is going to change everything on day one, but it's going to ensure that for the biggest use cases, stable coins, which are circulating all over the U.S. financial system, that we have the appropriate safeguards in place to avoid weaknesses that could be introduced if the wrong type of products come through. So there'll be reserve requirements, there'll be disclosure and audit requirements, there'll be Bank Secrecy Act and suspicious activity reporting type of requirements. All the type of rules that apply to traditional financial institutions will apply to crypto financial institutions to ensure that the continued growth, the industry is going to continue growing. We just need to make sure that as it does that, that all the kind of safeguards are in place. And so that's what's happening now. And I cannot overstate how big of a regime change it has been, this last 6 to 9 months compared to where we were previously. And that's not because earlier regulators were, acting in some kind of a malicious way. It's because they were concerned about the risks of the asset class and dealing with, a variety of issues. But now the industry is in a healthy place. It's reaching mainstream adoption, and a full regulatory framework is coming together. We hope to see the first piece of law signed by the president this month. And another larger piece of legislation probably signed by the president in the fourth quarter of this year. So it's great to see. And similar efforts are happening in all the major regions around the world, the EU, UK, throughout Asia. So it's not just a U.S. effort, it's a global effort. And that'll allow the industry to continue to grow in a way that is safe for consumers and for the broader financial system.
I think that's great. And so it's definitely a regime that is open to this idea of continuing to broaden the asset class and the exposure to it. And that's at the federal level. You mentioned even at a global level. What about on the state side? Are there things that states are doing uniquely to kind of open up the platform for digital currency and blockchain, et cetera?
Yeah, there's a lot of that, and of course, in our U.S. structure, a lot of that is coordinated at the national level. But I'd say on the state side, what's most interesting is you really see the enthusiasm for digital assets popping up in a variety of places. And at the state level, the most important thing is that states run a variety of investment funds, whether it's pensions for state employees, teachers, et cetera, or endowments that are related to state universities. What you're seeing is digital assets, especially Bitcoin, now that it's in the ETF structure, being incorporated into those types of investment funds. And these are diversified pools of assets, stocks, bonds, other alternatives, commodities, these types of things, and they're held for their beneficiaries, for the longer run. And digital assets like Bitcoin fit very well in the context of those portfolios. They help grow wealth over time, and they're not perfectly correlated to the other assets in the portfolio, and potentially they can be a hedge for certain types of macroeconomic outcomes like high inflation or weakness in the dollar. So that's what I'm most excited to see at a state level is the states really kind of recognizing that these assets have a role in some of these state investment funds. And so in some cases that requires policy change, legislation. You see that going through in lots of different states. I think we will see that continue really throughout the country over the next couple of years.
I think that tends to give us as wealth managers some peace of mind as well. There's some perceived safety in numbers and the idea that when the big boys and the institutional investors are getting behind it, it means that we feel more protected in bringing it into our retail investors' portfolios. So I appreciate that. That's great insight as well.
Excellent.
Um, let's talk a little bit about misconceptions here. It is still a bit of an enigmatic space, right? Even though, again, it's been around for more than a decade. A lot of us think back to that idea of things being tangible. It is the opposite of that. If you could dispel one misconception or myth about cryptocurrency, what would it be?
Well, there's a lot of them. So I think maybe the most important thing is that just because it's digital, that somehow it is not, real and tangible like anything else. And maybe this is a generational thing, young people that have grown up in a world where, the internet was already there
Right.
when they arrived. And so things like digital uh, music or other things of digital value, video game skins that my kids spend money on, right? So things that are digital are real to them. The relationships that they make online are real to them, and to some ways that they're not to, and don't feel the same way to an older generation. Bitcoin is one of the most secure things we have. It is a computer network that is open source and permissionless. Anybody can be involved, but it's grounded in economic incentives. And those economic incentives create an immense amount of digital security around this asset. That's why something that is digital, it's something that an individual created and has, it's not endorsed by a government or some other agency, but it is grounded in economic incentives and this huge community of people all around the world that support Bitcoin. So for me, Bitcoin is just as real as anything else. So maybe that's something to get that people have a hard time getting their head around sometimes. But I think doing some homework on the Bitcoin network and on Bitcoin mining, which is the mechanics through which that computer network is secured, can be a way to maybe get the comfort level up.
I think that's great. And you mentioned some things even earlier. And for one thing, hopefully for our audience, they see that you don't come from a very narrow focus of only having worked in digital currency, but you have breadth of exposure to other asset classes. And so again, a good ability to discern, like you said, the tangible, real nature of this as opposed to other areas, or opposed to other areas you've worked in. The economics incentives you mentioned. Connor, your colleague, has also kind of shown us actual facilities where mining is occurring. Zach, you mentioned the idea that it's a $3 trillion industry. So hopefully the fact that there's, like you said, huge populations around the world, there's economics incentives to be involved. There's a lot of money that's been invested in it. There's staying power behind this otherwise kind of ethereal, no pun intended on Ethereum, uh, asset class itself. What excites you and what scares you about the current economic environment as it pertains to digital currency?
Well, look, I think what excites me, I think, at the moment is that stable coins are on the cusp of a real big mainstream breakout. So, stable coins are just digital dollars on a blockchain. Sometimes critics will say, well, I'm not using my Bitcoin to pay for coffee. Maybe it doesn't work for that. And look, there's elements that true. Bitcoin is kind of digital gold. We don't pay with gold bars for our coffee either, but we pay with digital dollars. And stable coins are digital dollars on these public blockchains, and they are increasingly used for payments use cases. And this is particularly the case for the places in digital payments today that work least well, like cross-border payments. Cross-border payments are complex. They involve a lot of intermediaries, correspondent banks, and they can involve a lot of costs, especially for low dollar values like remittances, which are hugely important for people in all kinds of different countries. Stablecoins allow us a platform for much faster, cheaper, more transparent cross-border payments. And we're already seeing that, happen around the world, especially in emerging markets. And now we have legislation in the U.S., the Genius Act, which we hope will be signed by President Trump this month, which will allow these same use cases to flourish in the United States. So I think maybe if there's number one thing that I'm most excited about, it's today it's the breakthroughs of stablecoins. What I am. I'm an analyst in markets, and so I'm always concerned about lots of different things. Look, I think what I would say is the macroeconomic climate seems good. Assets are going up, equities are going up, crypto is obviously going up a lot. So it's been a great period for the asset class. But Bitcoin is a big asset. Its market cap is larger than Amazon now. So Bitcoin is not removed from all of these things that affect the broader financial system. If we have a recession, if we have a more disorderly tariff conflict, if we have geopolitical military conflicts, these will affect all markets, including crypto. So that's when I think crypto is in a great spot. Really, the industry is really cooking, and there's a lot of positive momentum. But the broader financial markets context needs to be taken into account. So I think a lot about those things. The jobs reports, the Fed meetings, the tariff announcements, all of these things can affect the price of Bitcoin. So we're just as focused on that as well as the fundamentals in crypto.
Oh, so what I'm hearing, that's fascinating. And I think about the idea of in wealth management, we think modern portfolio theory and we think correlation. How much does the movement in one asset class mimic the other? And I think we've always looked at digital currency as being very dislocated and maybe non-correlated, but it sounds like what you're saying on the concern side is the bigger that it gets, the more players there are in it, the more it starts to mimic a little bit of that movement of the larger macro financial realm. I think that's a really interesting point, and maybe even an encouraging point for investors who are already in it to consider some of those different ways to get involved. And having had the opportunity to speak with your colleague Connor, we know that there's private placements and ways to get involved in some of these things that may go closer back to that grassroots and maybe kind of mimic more of that old non-correlated nature. I think it's exciting to hear about, like you said, just the proliferation of stable coins. I love your definition, digital dollars on public blockchains. That always seemed to me to be a good risk mitigant of these things going away. The more often that they're used and the greater the network of utilization, the higher the likelihood that everybody's going to lobby to keep it in place. So that is encouraging. Thank you for that. And with that, I would say thanks for your time today. I think we don't want to make everybody experts, but maybe a little bit smarter than they were before they got here. So any closing comments that you want to throw out there?
Well, it's my great pleasure. First off, thank you for the opportunity. Maybe my closing comments would be, yes, Bitcoin is just the tip of the iceberg. Definitely start there. It's a very important asset. In my view, almost all multi-asset portfolios should have a Bitcoin allocation and eventually will have a Bitcoin allocation. But that's just the very beginning, and Grayscale is involved deeply there for a long time, but also in the long tail of assets. Some of the early stage sort of venture-like investments that we offer in private placement products can be interesting for investors that are looking for some of the earliest stage technology in crypto. So please reach out to Grayscale. We're happy to steer you in the right direction.
Zach, Connor, you are awesome. We greatly appreciate you being here and sharing your insights. And who knows, maybe after the Genius Act, we come back and talk again or in 2026. So thanks again for your time today.
Our pleasure. Thank you.